Hello traders and welcome to another video review. Today is Thursday, July 6, 2023. Let's find out what's going on the Forex economic calendar today. As you can see, we got plenty of very important data releases. All of them will be released during the US session. So we start 2:15 from ADP Non-Farm Employment Change. Market participants expect a drop from 278,000 to 230,000. Initial jobless claims are scheduled for release at 2:30. This time there is a slight increase expected from 239,000 to 245,000. Services PMI are scheduled for release at 4:45. This time there is a slight drop to 54.1 points from 54.9 points expected. ISM non-manufacturing PMI is scheduled for release at 4 o'clock. There is first increase expected in the ISM non-manufacturing PMI, this time from 50.3 points to 51 points. JOLTs Job Openings are scheduled for release at 4 o'clock as well. And at the end of the series of the data releases, crude oil inventories are scheduled for release at 5 p.m. So plenty of the very important data for today. Of course, tomorrow I'm getting ahead of myself, but if ADP Non-Farm Employment Change is on Thursday, that means NFP payrolls are on Friday. So tomorrow will be even busier day than today. Nevertheless, because all of this data are about the US, basically, let's find out what's going on the US dollar index first. US dollar index 4-hour chart is showing us as signs of the weakness. Why? Because what do we have here is some sort of the rejection of the level of 103.51. If we zoom in, we can clearly see that even our candlestick pattern indicator shows us the doji candle. Doji candle high was made at the level of 103.43. So that was a roughly 8 pips below the high from the end of the June 2023. So we got the doji. Now we have the confirmation. Looks like this candle will be red, so we have the confirmation. What we need is the extension to the downside. So far the move to the downside is not that big at all. Nevertheless, we can see that this market is slightly under the bearish pressure. From the lows of 101.89 towards the series of the let's say touches by the various during the various times, we got very nice trend line support. Short-term trend line support from this from this low is still valid, is still a crucial, let's say, technical indicator for this market. The only a breakout below this trend line, a sustained breakout, not just as a deep lower and then bounce, deep lower and then bounce, but sustained breakout below this trend line would change the outlook to more bearish. And then of course the target would be the 50 periods moving average located at 102.96, and then the local technical support 102.72. So please notice the fact that this is very important level right now, important situation, maybe not level but the situation on the US dollar index, and the market is clearly waiting for the data from the US. If there is a breakout to the upside, the next high, the next target for the bulls is the technical resistance and the swing high located at 103.73. So this is the next target for the bulls in case of another movement to the upside. So it looks like a pretty nice situation, an interesting situation for the bulls and bears on the US dollar index. Let's find out what the SP500 is doing. So the S&P 500 might react on today's US data as well, very important data. So what do we have here is kind of a similar to the situation of the US dollar index. We have the swing high 4,472, fine. Then we have engulfing pattern. Then we have some kind of a doji. So it looks like the bulls are they started to make a pressure on the bears. The key intraday technical support is 4,410. So as long as we trade above this level, the outlook remains slightly bullish. Please notice that I'm saying slightly because we have a very sharp reversal from the extremely overbought market conditions around this highs, and of course this kind of a shooting star-ish candlestick, right, towards the level of 52 points only on RSI. So we are about to test the level of 50, which is the neutral level, and that would correspond with the level of 4,410. Okay, so please be really focused on data releases and the market reaction, especially S&P 500 reaction to this data releases, because there might be some sort of a breakout to the downside sooner or later on this market. And last but not least, let's talk about the US dollar to the Japanese yen, because what's happened here is, as we expected it previously, as we anticipated, we have some sort of the extension to the downside. So the pullback is being continued. We got the swing high and the technical resistance around 145.08. Let me just mark it as the thick red line. Okay, now that 50 periods moving average is mushrooming, so which means it's making the topping pattern, and it's reversing lower. We have the doji or a kind of a long-legged doji candlestick pattern on a 4-hour chart, confirmation and extension candle 1, extension candle 2. Where are we heading? We're heading here. 143.04 is the next target for bears, because this is the 100 periods moving average. So the momentum supports this outlook. The momentum definitely supports this outlook, and we can see that there is still some kind of a room towards the level of 20. Right now the RSI is on 36 points, so there is still room to the level of 30. So there is still a room on the chart, and we might see downside extension very soon in the US dollar to the Japanese yen chart. There isn't actually that much of the horizontal support, because this is recent trend to the upside was very strong, but we can mention this one, 143.88, which was violated. Okay, so maybe the level of 144 as our intraday technical resistance will be better for our technical analysis. And to be honest with you guys, if I should pick some kind of a horizontal technical support, 142.79 might be the one that should provide some sort of the weak and temporary support for the bulls. Let me just then switch to the daily time frame chart, because it's very important how is the daily being built. As you can see, the daily chart is showing us engulfing pattern after this level here. The technical resistance at 145.10 was hit. Then we have the first engulfing pattern, then we have inside candles, and now we have a clear engulfing pattern to extend lower. It looks like the market is under the bearish pressure. It's coming down from the extremely overbought market conditions on a daily time frame chart as well, and there is still plenty of room here to go lower, way lower than it is right now, of course, towards 100 periods moving average, and then even lower. So the outlook for the US dollar to Japanese yen remains slightly bearish, and the reversal is in progress. The reversal maybe pullback, maybe correction. We don't know that yet. There is not enough information to judge with 100% certainty, without any doubts, what kind of a market movement is this? Is this pullback, reversal, or just a correction? So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.